In this week's update, have markets gone mad? The path of least resistance is firmly higher. And is this a significant precious metals reversal? My name's Garry Davis. I'm an authorised representative of Primary Securities, and the information presented here is general information only. All right, look, lots happened last week, but not a lot changed. So let's go through it. Trump remains unpredictable as ever. So let's just look at some of the policies that we know about, and we've got a pretty good idea about where he's going. And there is, in a way, whether you agree with him or not, there is a clear rationale to what he's trying to do. They're not just a series of disjointed, emotive policies. There is a very clear point to what he's trying to do. But the question is, will they work? Will there be unintended consequences? These are all unknowns that are making investing more difficult. And just one example, they're talking about, or may have already done, getting rid of 75,000 of the federal workforce. Now, on one level, the public service got too big, so it makes perfect sense to slim the public service down. But where do those people go? Do they have skills that can be used elsewhere? And no one, really knows the answer to that. And so the potential unintended consequences, the impact on the level of unemployment and the economy. And throughout the last few years, the strength of the US economy, in the face of quite a few challenges, has remained very good. Corporate earnings are coming through very well in this earnings season. So things are humming along relatively well, certainly compared to most countries in Europe and most countries in Asia as well. So will these new policies disrupt that pretty stable balance that the US economy has had in recent years? And of course, the answer is we just don't know at this point in time. Reciprocal tariffs, again, make sense on one level to address trade imbalances, at least from the US point of view. But what will it do to global supply chains? Again, no one has any idea what will be the unintended consequences. And of course, what does that then do to commodity prices? What does that do to levels of inflation? The trade imbalance thing will certainly impact China and India more than most, the two most populous countries in the world. So it's going to be very interesting to see how that unfolds. But it just all adds up to the same thing that we've faced since the election result. And that is we've got more uncertainty than we've had in decades. And how will the market respond to that? So far, the market response has been extraordinarily positive, with the US indices trading at new all-time highs. If we look at it from just the US market, obviously, which is the key important starting point, earnings have come through well. Outlooks are strong. Generally, there's been a few that have been weak and those stocks have been punished. But generally across the board, the outlooks are pretty good. But the thing that strikes me is that there are many things that could go wrong, and there's very little, if any, allowance in the market in terms of pricing and valuation for that to be absorbed. So it's not going to take a great deal to disrupt this market. So a great deal of care is still required. There are headwinds, potential headwinds in many, many places. So the message is just be careful. There is so many uncertainties out there. And even more than that, the environment is shifting very quickly. Markets go well when they feel that they've got a pretty good handle on what the future looks like. And if the market thinks that the future is uncertain, then it's not going to react too well. So when you put all these things together, the uncertainties, the valuation, it means that there's just very little wiggle room in the US market, in my view. If we look at US inflation, we had some data points through the week. The CPI and the core CPI came in at 3 and 3.3% annualized for January, which was comfortably above expectations. You would have thought that that would have been sufficient to disrupt the market, but not so. The market's hit new all-time highs. So you're in a serious bull market when potentially bad news, logically bad news, just gets completely ignored. Transportation was the big contributor. Transportation rose 8%, and in particular, transportation insurance was nearly 12% higher year on year. So they were significant contributors, but obviously the market doesn't worry too much about those contributions. Personal consumption expenditure, PCE, remains the Fed's preferred gauge. So they'll be looking to that next figure for guidance on what they do with rates. If you go back 3 or 4 months, the market was pricing in something like 3 or 4 rate cuts for 2025. They're now pricing in only 1 rate cut. And that means the market has gone up when rate cut expectations have been significantly altered. So you would think logically that something needed to offset that. And obviously earnings are contributing, but are earnings really that good? It just feels like it's a market that could reverse without too much difficulty at all. However, at the moment, the momentum to the upside is just awesome. And so you should stay with it while it prevails. Just make sure that you understand what your exit strategy is and what your exit triggers look like. That's the key message. As always, you should obtain your own financial, legal, and any other advice that you need, because it is so easy to lose money in the market. You need to be really on your game, particularly in this kind of volatile, uncertain market, to do consistently well. Let's look specifically at the American market. The S&P rose almost 1.5%, and the NASDAQ was up almost double that. So a very, very strong week for the NASDAQ. And large cap growth stocks certainly bounced back as an index of the market. And that's a little bit unexpected given that their valuations were high already. The Russell 2000 IWM is the ETF that covers that, was pretty much flat across the week. And as I said, despite all the headwinds, it set a new all-time high. But I would have to say, looking at hundreds of small and mid-cap stocks, as I do on a very regular basis, selected small-cap momentum remains very powerful. The stocks that are trending very well continue to do so. There's very little hesitation in the US market once stocks start trending. US dollar was lower at 106.8, so it's broken that support level. The 10-year yield didn't move very much at all, pretty close to 4.5. And the VIX was just under 15. Let's go and look at some charts. So we'll start with the S&P. This is a weekly chart. New all-time closing high and new all-time high during the week as well. So that's very, very positive. And you can't look at that chart and say that we're in anything but a very powerful bull market when you only get 3 weeks to the downside there, 3 weeks there, 1 week there, 1 week there, a couple of weeks here. So we remain extremely strong at the S&P level. There's the Russell 2000, flat for the week, still yet to break out to all-time new highs, but not that far away. The NASDAQ looking even more impressive, up nearly 3% for the week. If we look at semiconductors, they're just going sideways at the moment, and there's a few challenges within the semiconductor industry, but this sector is so important for the sentiment of the market. It's not bad, but it's not as strong as other parts of the market. If we look at the relative sector strength over the period since September last year, no real change. Nothing has changed in the order there. Certainly, we've seen a little bit of strength in the last few weeks from materials, but other than that, the leaders are consumer discretionary, communication services, technology, and finance. They're the strength of the US market at the moment. And similarly, in Australia over the last month, there's been no change at all in the order of strength. Notably, small caps just seeming to do better and better bit by bit. So that's where we sit in terms of the relative sector money flows. If we look at the Australian market, the Aussie dollar inched a little bit higher, almost to 63 with that US dollar weakness. Our index managed to gain 0.5% for the week. New all-time highs, amazing, and pretty decent breadth as well. However, in general, there's a few, but in general, there's an absolute minority of stocks that are sustaining a breakout, sustaining a trend. I'm seeing so many breakouts that look terrific that then immediately fail within a day or two. So the Australian market is pretty hesitant. I was surprised, however, by very positive response that our market showed to the US inflation data. When I saw what the CPI numbers were in America, I thought we would be in for a rough session in Australia the day after, but not so. It actually improved. Turning now to precious metals, gold added another $24, went over 2,900, but finished just underneath. In Australian dollars, 45.55 is very, very strong, and some of our biggest gold producers are just making bucket loads of money. Silver shot above 34, but then eased back to 32.73, and the same thing happened with gold. So that is the story of the week with respect to precious metals. There was a decent intraday reversal, and 9 times out of 10, when you see these sort of sharpish intraday reversals in gold and silver, they do follow through to the downside. So that is quite possibly significant, and it generally signals the finish of the short-term momentum, and we've had some enormous short-term momentum, particularly in gold. So a little bit of care, don't get drawn into the increasing hype that we're hearing and reading about with respect to gold. We could have just entered a period of consolidation. And if you look at the commentary is extremely bullish right now. Finally, a lot of commentators are jumping on the bandwagon. I'm not saying that the medium to longer term trend is over. In fact, far from it. There's no indication of that at all. But when you put together the sentiment and the commentary and the reversal, just wouldn't be surprised to see this run just take a breather for a while. If we look at some of the local miners, 2 of our major producers have reported recently. Underlying net profit was up 142% in one case and 251% in the other case for the half year. And cash flows are running at better than 400% when you compare them year on year to the previous half year. So local miners are just absolutely making a truckload of money, as they should, with the Australian dollar gold price at 4,500 and above. Just a bit of a fun fact, since 1979, runs of 7 weeks of positive closes in gold has only happened 1% of the time. Now, that doesn't count for anything specifically. It just tells you that we've just had 7 weeks of positive closes. It just tells you that the odds are against this continuing for too much longer. There's going to be some sort of pause or reaction to the downside. So just be a little bit careful in precious metals. So let's go and have a look at those charts. First of all, I'll just look at the currencies. So there's the US dollar. We had a breakout, gone up to over 110, but we've now pulled back and we've broken through that first level of support. There's another level of support comes in around 106.3, and then we drop all the way back down to 104. The Australian dollar is pretty much looking at the mirror opposite of that, as you would expect. I didn't show the chart of the ASX 200 either. This is a weekly chart, so if we put that on a daily, you can see there's certainly some selling on Friday. Now, what our market will do on Monday, given a very positive lead again from the US, is impossible to know. But we've broken out to new highs, but finished weekly, I think is the best you can say. Silver got up to 30 It got above 34 at one stage. It's not really showing that on this chart, but particularly if you look at the futures, they were above 34 at one stage and then pulled back. So that's silver. And if we look at gold, so this is the weekly chart initially, but if we put this on a daily, you can see what I mean. Let me get back to silver. We need to do that with silver as well. So silver, there was quite a sharp intraday reversal. So we opened roughly flat, traded way up, and then came all the way back down and actually closed below the open. So that's a pretty decent reversal. The odds are that that will follow through to the downside, and we might be back challenging 31 or something of that nature. So that's a significant intraday reversal. And if we look at the same thing on gold, not always, but often when you get a clear reversal candle like that, so it's just been enormously positive, then the length of this candle is much greater than what we've seen to the downside. Close near its lows, the odds are very strong that we will get further retracement. Now, an obvious level of support is going to come in just under 2,800. So that would be an area that I would be looking at. In Australian dollars, the same thing happened because obviously the gold price came off, but the Australian dollar also went up. So we may just start to see a bit of short-term weakness in that precious metals market. Just while I'm here, Bitcoin price finished at 97,500. So just on Bitcoin, the positive news, probably the most positive news of the week, was that Coinbase Global earnings absolutely shot the lights out. An extraordinary result that well and truly beat market expectations. So that was a real positive injection for the market. But if you look at the bigger picture, concerns about regulatory matters are keeping investors pretty wary and therefore prices in check. And that's why we've been hanging around this $100,000 mark, just above, just below, for some time now. Turning to other commodities, copper had a pretty good week, but did come up towards the end. $4.63 is where it finished. Nickel at $6.90. The fact that Trump has not announced tariffs, as he did with steel and aluminium, has not announced tariffs on copper yet, is a point of uncertainty. Will he or won't he? Crude oil eased back to $70.45, and crude oil is just so difficult. It's back to a key support zone, so this is critical, around the 69.70 area. But there are just so many uncertainties around both supply and demand that it's just hard to know where you are. And on top of that, if things do get resolved with the Russia-Ukraine war and sanctions were to be lifted, that's an if, but if sanctions were to be lifted on Russian oil, then what does that do to supply? So very difficult market. I just think there are far easier investments elsewhere than in the oil market. There's the spot copper chart. It was looking very strong during the week, almost got up to $4.80 at one stage. So that's been a very strong period in the last 3 or 4 weeks. Wrapping it up now, there are incredible opportunities everywhere, hundreds and hundreds of them in America in particular, but certainly plenty in Australia. But there's no rush. You can take your time. There's going to be a lot of volatility during the year. There is going to be better entry points. I wouldn't be chasing any prices at the moment. Decide what you want and let the market come back to a price that makes sense for you. We've got great earnings. We've got great trends, particularly in America. Many stocks are running very quickly. And when they're running very far, very quickly, then they're at risk of a short-term pullback. So it's highly likely that you're going to get a better opportunity on a stock that has been doing recently very well. So it's just a relatively straightforward matter of get organized, understand what you want to buy, and set the price that you want to get in at, and just pick them off as the market comes back to you. As always, I'm in the market to make money. The stock that you must own just because you like it, you've got to get rid of that thought because it's a wealth-destroying thought, because it will tempt you to pay too much for a stock that may not be worth it. So forget about that. It's just about making money. So any stock that qualifies according to your fundamental and or technical triggers, then they're the ones that you want to pursue, not the stocks that you like. It's just not a smart way to make money. Portfolio analyst this week coming. There's going to be more of a focus on technical analysis as well, so that should be a good session. More information on the website. Here's my email address, and I'll be back with you next Sunday. Cheers.